A lot of traders struggle to know which parts of an inefficiency or a fair value gap that the market is going to mitigate for them to buy or sell. And this often causes them to FOMO into the market at the wrong areas and take significant losses that affects their psychology in trading. And in this video today, I'm going to share with you a very simple strategy on how I use the inefficiency for buy setups and also for sell setups. And in this video, we're going to be using Euro US dollar as a point of reference for this analysis. And the first thing I usually do is to better understand whether the market is bullish or bearish, because this gives me the ability to know whether I'm going to be a buyer or a seller. And in this case, as you can see, price was trending to the downside right here, and then we eventually broke structure right here to the upside. So the market structure is bullish. So I'm anticipating for price to come down into an extreme discount, and I'm looking for a point of interest, which is an inefficiency. Price mitigating this inefficiency, I don't really care whether it's going to mitigate the open, the 50%, or the close of the inefficiency. The only thing I want to see is a tap into that inefficiency. The moment price is in there, I'm looking for a 30-minute break of structure. And as you can see in this case, price didn't even mitigate the entirety of that inefficiency. It's only just tapped into it a little bit, and then the next thing we saw was a break of structure to the upside. And if we go to 30 minutes time frame, you can see clearly how after that mitigation, price broke structure right here. We created a high, and then after that we broke structure, and then right here would have been my entry, another inefficiency resting right here, entry right here, and I'll be targeting inefficiencies resting at the upside, or low resistance liquidities resting right here would be my potential targets, because these are easy key levels that the market could gravitate to. And as you can see very nicely, the key levels, how price eventually smashed through that take profit position. You can see that very nicely. This is the take profit position, and look how nicely price came in there, smashed it up, and then we saw another retracement to the downside. So with the current price action, we're currently on the 4-hour time frame. You can see another inefficiency we have right here. The first thing I want to know is what is the trend, what is the market structure, and in this case you can see clear as day, we created this, price created this low right here, and after creating this low right here, we broke structure, and after breaking that structure, this right here was my last up close candle, so that is going to be my point of interest. And because we have an inefficiency here, I'm going to be anticipating for a run on buy side liquidity resting right here, and look how nicely price took that inefficiency, mitigated the inefficiency, took the buy side liquidity. And the next thing I want to see after a run into this inefficiency is a 15 minutes break of structure to the downside. And right here we go to 15 minutes time frame. You can see right here, this was the low, this right here was the low, and then price, the moment we broke that structure, this inefficiency right here will be my entry position, stop loss right here, and then my take profit position, I'll look for low resistance liquidity zones, and right here a low resistance liquidity zone, I'll use that as my take profit position. And you can see how nicely price dropped straight down into that key level, smashing the take profit position. So if you found this video insightful, if this video has helped you in your trading, give it a thumbs up and follow me for more insights like this. I'll see you in the next one.